Good morning. Welcome back to the Junius Malpe channel. Thanks for joining us. Glad you can be here. Real quick, we'll take a rewind look at one of the last videos just the other day, talking about a 10% gold pop soon. The reason I bring it up, I got some messages from subscribers this morning notifying me of a move in gold this morning, which is going to be the majority of the conversation today. We're going to look at these moves in gold. There's a lot of different prognostications and opinions and assessments of the gold market, where it's going and what's taking place right now. But yes, we did talk about a 10% gold pop soon. It didn't really necessarily mean now or today, even though we've seen over a 0.5% move, $8 up today in gold or so. And again, like I said, we'll look at some charts. We'll look at that information shortly. But it did talk about where gold was going next year. There was differing opinions on that, and it used some charts, as we saw from one article, to show that gold was due any moment for breaking out, and it was, that narrowing, almost like a bull flag. There was like that trade angle getting real consolidated, and we saw the lows getting higher and the highs kind of coming down a little bit, tightening up. So we'll see what happens here. I've looked at this before. We've seen episodes like this where gold did a little rally. Everyone got, oh yeah, here it is. This is it. We're boosting. We're popping. Only to see that it gets sold off really fast within the coming week. So we'll have to see what happens here. I'm not really holding my breath, but let's look at some information. The first article is going to set the mood, kind of set the stage, and hopefully create inside of all of us the mental situation in which we view gold as a healthy place to have a portion of your wealth, by looking at the example that's unwinding in Puerto Rico. I want you to pay attention to some of the things we look at here and consider how these people's situations financially would be different had they allocated a major percentage, or even just 10 or 15% of their portfolios, into gold. The title of this lengthy article is "Broken Bonds: The Role Wall Street Played in Wiping Out Puerto Ricans' Savings." Yes, this is the same Wall Street and the same banks that want to wipe out your savings. So pay attention to this, as I am assuming many of you might be exposed to the Wall Street bankers at some point in some way with pensions or investments. When residents of Puerto Rico funneled their life savings into funds that were largely made up of the island's bonds, they were told their money would be safe. They were told that they would receive interest payments that were higher than many comparable opportunities. They were told income would be tax exempt. And when those investments began to evaporate 4 years ago, they were told not to sell, that the market would rebound, and they would recoup their losses eventually. This year eventually became never, after Puerto Rico triggered bankruptcy-like proceedings and the island began restructuring its debt to seek protection from creditors, pushing the already depreciated bond prices within the funds lower. Then came Hurricane Maria, and those prices plummeted even further. To have this type of carnage being born on this small of a population, in this small of a geographic territory, is something that we'll likely never see again, said attorney Jeffrey Erez, who has filed hundreds of securities cases on behalf of Puerto Rican investors. You have the complete investing class on a very small island having lost 50%, 60%, 70%, 80% of their retirement savings within a few years. There's no hope. Gervasio Garcia Rodriguez, 76, saw losses firsthand. Along with wife Maria, 73, her brother Miguel Castro Arroyo, 72, and 2 other relatives, they invested their life savings into funds created by UBS. Today, they say those investments have dropped about 80% in value, with the family collectively losing about $2 million. There is hope, but not for us. There's no hope, said Garcia, a retired history professor who taught at the University of Puerto Rico. In this situation, what are we going to do now? It's sad, very sad. The lengthy article is over on CNBC, and there's multiple examples similar to the ones we just heard of people losing 80%, nearly all of their wealth and investments. Now, had they put money into gold, and yes, I'm sure some of you will chime in and in the comments even recommend 4 years ago cryptocurrency, they would still have a portion, if not more, wealth. Having all of their wealth exposed to the financial markets, especially to bonds managed by the banks in New York and elsewhere, was detrimental. I mean, we just read a major portion, if not all, of the investing class of the population of Puerto Rico has lost 80% of their wealth. That's going to damage the island for decades, generations. That investing class, that group of people that held wealth, held capital, would be the ones to fund projects, infrastructure, and keep the island having employment, having wealth, and in a way maintaining some form of a healthy economy. Removing that wealth from that investing class is going to be very damaging in the future, I believe, to the economy. This is an example of where gold would have helped the island of Puerto Rico. But I am sure that very intelligent elites and economists recommended that the portfolios of these individuals not contain any of the archaic and barbarous relic, as it would only, hamper their ability to earn income and percentages and yields over time, and that gold would do nothing for them. Well, I can tell you one thing gold would have done for the island and the people of Puerto Rico. It would have maintained its value and, if anything, risen by around 8% per year, fighting the inflation of the US dollar and other fiat. There you go. Some of the headlines this morning are in no particular order. We're not going to dive into too much detail on this article, but there was an article and an opinion piece here. Analyst who predicted Bitcoin's rise now sees it hitting $300,000 to $400,000. This was up on CNBC 5 minutes ago. Quick excerpt from the article reads, I don't know how much gold there is in the ground, but I know how much Bitcoin there is. And in 2 years, there will be 300 million people in the world trying to get their hands on a few million Bitcoin. Ronnie Moas, founder, Standpoint Research. All right, look at the boards here. We've got silver up at 0.76%, up 12 cents, 16.18. And we've got history's most indestructible form of capital, gold, up $8.50, up 0.68% at 12.66. Nice little pop this morning. And we read that gold ticks higher as nerves over U.S. tax bill hit dollar. Platinum up $25.50, up 2.87%. Palladium up 235.23%. Look at that pop in platinum. You platinum holders should smile from ear to ear with a nice healthy little pop like that. 25.50. You can't dislike that. And there's a look at the morning chart for gold. 1266.30 gold COMEX February 18. Please take note there on the lower left side under key stats. The year-to-date percentage change, 8.36. And when you look back at the record for gold, the last couple of decades, its year-to-date percentage changes aren't too shabby. And again, 8.36% year-to-date change. And it's not over yet. We haven't seen January 1 yet. We very well could see a year-to-date change of 9-10%. You see the 1 year percent change, so exactly from a year ago, going back to December of last year, we've got a 9.25% change. So very likely we'll see a 9 or a 10% change in gold over the course of the last year. Now here's an interesting little snippet of information from CNBC. Bitcoin bear Peter Bukvar says it's about to crash, buy gold. Now that's just one man's opinion, one side of the argument. There's many of them out there, and it's never a bad idea to be diversified somewhat. I don't think at this point it's a horrible and deplorable idea to have a small percentage perhaps allocated to Bitcoin or other cryptocurrencies that are very stable and going to be with us most likely for a long while. Now, if any of you would like to, I wrote an article titled Pre-2017 Cryptocurrency Mindset. It's one of several articles that I've written on the subject over time. It's over on my Steemit account, and if you'd like to venture over there, if you are on Steemit, come find me. I'd like to be able to engage some of you over there as well. And I will discuss 3 concerns that I had previously with cryptocurrency and how they fare today, things that might have evolved or changed over time as the infrastructure has been put in place, as well as my own personal expansion of knowledge and experience in utilizing and experimenting with the cryptosphere, if you will. So I encourage you to go over there and just read that if you're one of the people that likes to read lengthy, boring pieces of written word. It's over there waiting for you. It will be on there and you can find it. Check it out. Find me on Steemit, and that way I can come over and find you as well and see what you have going on in your account. We also have some silver news to discuss today. Here's a quick look at silver's morning chart. And I just wanted to point out as we look at it, you can see it's kind of got a downward trend there as the lows tend to be getting lower, although they picked up a little bit towards the end there. Hard to tell where silver's going to go. As low as it is, you would think that the upside is the only way it could go. The one concern you have when looking at the silver chart, and it's just a disheartening thing to look at, is the year-to-date percentage change. It's down 0.75% year-to-date, and on the 1 year percent change, it's down 2.16%. Down 2.16% on a 1 year. Gold fared a little bit better. Again, it was up, 8.25 to 9.1%. About, I believe gold will finish the year strong, about 10% up. And looking at this chart, seeing where silver's at, it wouldn't really surprise me if it sold off again from the 16 level at some point. It's just got a lot of pressure on top of it. However, at these prices, down where it is, it looks like it's a buy for some people. And we've talked about where it could go next year, but let's look at some of these other articles and see where it could go from here. Personally, my stance, my opinion on this typically is I'm heavy gold. I'm always heavy and long gold. And if I had a large portion of money to put towards either metal at this point, I do think gold's as low as you're going to get it. I think 1150 is the floor. I don't think it's going any further down there. With silver, I don't know. I mean, it could hit. I mean, you see statements like it could go back into the 15 range for a while and sit there and lag, with gold popping up and separating away from it. Many of you know and have come to associate my channel in the past with being a very gold heavy stacking channel, and that is true. That is the case. I do prefer it of all the precious metals out there. That doesn't mean I'm opposed to silver. I do hold silver. I've always held silver. I just prefer gold. But one thing that confuses me is there's a large portion of the stacking community that is heavy, or if not anything, 100% silver with zero allocation towards gold. And that does confuse me, especially when we look at the history of the two metals, the history of economics and money and wealth, and the stability of the asset classes themselves when you look at both gold and silver. When you look at the prices of gold right now, where it is, where it's being held, I think we have a buying opportunity with it. I think we have an upside. And we're going to see an article that points to gold's potential outbreak here in the future. When you look at the chart, we talked about that in the last video before this one. We talked about it in the opening of this video. Gold looks like it's ready to pop. So let's check it out. Here we've got the New York spot gold. There it is, opening this morning and just going up, and away, up $8.10. Here's the 24-hour spot gold. Again, rising up from about $12.55, and we touched on $12.66 earlier. I'll have to see where we're at currently. Okay, so now we see hedge funds are pulling out of gold and seeking thrills elsewhere. But sometimes these are not the brightest guys of the bunch, as they have been known to make bad decisions in the past. Traders dump net bullish bets at fastest pace in 5 months. Bullion's 60-day historical volatility near the lowest since 2001. And guess what? 2001 was an awesome time to buy gold. So if you're going to base it on historical information, the 60-day historical volatility, you look at the prices the way they are at, potential predictions about it breaking out and popping here, yeah, I would say that I'm comfortable with the fact that I bought a 10th ounce of gold last week. I look forward to hopefully gobbling up some more at some point in time. Hedge funds are pulling out of gold bets as more exciting moves in equities and cryptocurrencies make safe haven investments look boring. Money managers cut their bets on a bullion rally at the fastest pace in 5 months as prices head for their worst quarterly loss in a year. Speculators are throwing in the towel as the metal failed to sustain the gains that took futures to a 1-year high in September. Nobody cares about gold right now, said Joe Foster, who manages the $670 million Van Eck International Investors Gold Fund from New York. With the stock market marking new highs, everybody's talking about Bitcoin. Nobody needs a safe haven asset in this environment. But I think it would be foolish not to have an allocation to gold because it has a very low correlation to stocks and it's a hedge against systemic financial risk. Excellent point, Joe. Again, when everyone's rushing into the cryptos and the stock market and leaves gold not danced with at the financial dance, you might want to walk up and ask her if she'd like to dance because it might be the best option going forward and the most stable. And here we see funds are exiting gold holdings as returns trail other assets. They're giving up, throwing in the towel, bunch of wusses. You could just argue that they're impatient, and investing is the flow of money from the impatient to the patient. And I'd be happy to take some of their money. Waning haven demand, gold open interest tumbles as optimism fades. COMEX gold aggregate open interest. And here we see buyers flee. Gold coin sales in U.S. slump as prices struggle to gain traction. We've also seen similar reports from the U.S. Mint as Silver Eagle sales plummet and just cave in with investor demand and consumer demand dropping off. But there you can see, same with gold coin sales plummeting from the U.S. Mint. Very low numbers indeed. And here we are, another headline. Gold speculators drop their bullish bets to lowest in about 5 months. Everybody's throwing it in and just caving. They're just caving in on it. Well, guess what, gold? I still love you. I haven't given up not one single bit. I know you're going to pull up out of this, put on the gloves, and knock some sense into these speculators. Gold speculators drop their bullish bets to lowest in about 5 months. Gold COT futures large trader positions. There's the open interest down below. Yeah, well, you guys can drop your bullish bets. I'll take you up on it. Let's put some money on the table. But wait, what's this? Get ready. Gold showing signs it's headed to $1,700 or higher. Analysts. December's volatility has been a nail-biter for gold, but the last 3 days, many contain the greatest clues as to where the metal is headed in 2018. Something very telling has happened in the last 3 days of the gold market. This, according to longtime commodities trader Vince Lancy, founder of Echo Bay Partners. The last 3 days have reconfirmed my commitment for a much higher gold price in 2018. We are making higher lows for the year. The recent behavior made me nervous, but something very telling happened in the last 3 days, Lancy said in an interview on Thursday. On Tuesday, we had a short covering rally, and Wednesday, there was a 10,000 contract increase in December. That's very unusual. That is an over 2.3% increase in open interest, Lancy explained. The point Lancy stresses is that gold is now back in a safe area between $1,250 to $1,275 an ounce. The $1,700 call, I believe, is going to come to fruition. If gold gets above $1,275, I will double down on a momentum bet. Gold prices rose on Friday and were set for their first weekly gain in 4 weeks as uncertainty over the passage of U.S. tax reform pushed the dollar to a 9-day low against the yen. Spot gold was up 0.4% at $1257.76 an ounce and set for a weekly gain of 0.8%. U.S. gold futures were 0.3% higher at $1260.50 an ounce. And we see this morning the pop in gold hitting $1266. We'll have to see where it closes today, but you see how he states that if it hits $1275, he'll double down on a momentum bet that gold will hit $1700. Gold extends early gains as greenback weakens further. I'm actually watching the gold price right now live as we record this. We're sitting at $1261.58. It's bouncing back and forth. It's having a real hard time getting to $1262 again. There we are at $1261.54, $1261.55, 59, and then back down to 51, then to 44. So it keeps hitting this like right about that midway to 3/4 of the way point from $1261 to $1262. So right about that 69, 70 cent range. It just keeps bouncing back down off of it. But I'm going to most likely go live here pretty soon. I'll put this chart up on the screen and we can talk about it while we take lunch. But I got to finish this video up first. Again, the daily highs were this morning as it was up $9 an ounce to $1266.50. That's what I'm waiting to see. I'm going to see if it breaks the day high here at any point. I mean, it just needs to punch up $5 more and we are there. The metals have been under pressure since the end of November and basically broken some very key levels from a technical perspective. The competition for alternative dollars has become fierce, especially now since major exchanges offering Bitcoin products, which is legitimizing the cryptocurrency. With Coinbase.com opening 100,000 new accounts in the last few weeks and the exchanges, coupled with the equity markets at all-time highs, there isn't a lot left over for the metals. However, out of nowhere, there are some interesting developments from the commercial world of investing. Commercial banks, notoriously known for holding massive shorts in gold and silver, have suddenly started buying silver. This action may free up silver and bring new money into the market, indicating that the bottoms may be in. One thing is certain, the risk versus reward favors owning silver at these levels. That's from Kitco News this morning. We then see gold, silver could separate at these levels. Bill Miller's hedge fund has half its money in Bitcoin. It's just about 50% right now, Miller says, regarding his MVP1 fund on the Wealth Track podcast with Consuelo Mack. Miller says the fund is exploring ways to mitigate risk and that Bitcoin won't be half of the fund for that much longer, but it doesn't necessarily mean he'll be selling Bitcoin. Miller says on the podcast that the closest he came to having half his fund in one asset was in the 1990s when his fund had 20% in AOL, close to 20% in Dell, and 10% in Fannie Mae. We interrupt this program for a special announcement. While making the video, I just received an email from Quality Silver Bullion regarding the 1/4 ounce 999 gold piece for the channel here, and you're not going to believe it. The spot price on these, overspot I should say, will be $15.22. $15.22 over spot. And they're going to come with a clear protecting capsule to protect the coin, the 1/4 ounce gold coin. So that's, to me, that's awesome. Those 1/4 ounce capsules are typically $1 or $2 or something like that, right? So you'll be getting a 1/4 ounce of gold for $15. I encourage you to check out the images of that, of what the coin's going to look like. It's going to be a high quality, beautiful bullion strike of gold. I've explained the ever so slight changes we have made from the original silver piece, and you can see them reflected here. The actual die will be copied off of the very same clay sculpt done by Mr. Badia, the engraver and sculptor that made such a beautiful, beautiful depiction of Marcius. So it'll be identical, just on a smaller piece, a 20mm piece. And we moved the fineness of the metal and the weight of the metal over to that right side of the obverse rim there of the face. You can see 1/4 ounce fine gold 9999. date, 2013, year the channel was founded, not the date they were minted. These are going to be, again, 1522 over spot. We've heard some grumblings out there that, oh my gosh, because it's such a low mint population, they're going to be exorbitantly expensive. You're not going to find a 4.9 quarter ounce gold piece for $15.22 over spot. And once again, only 400 will be minted. So in effect, the junior small P community, with the purchasing of this Marcius round, will consume and remove from the markets 100 ounces total of gold. I'm not making a penny off of these, just so you know, in case there's any misunderstandings out there. I know some people think that somehow I'm selling 100 ounces of my own gold to have these made. That is not the case. If I held 400 quarter ounce plankets of gold, I wouldn't sell them at all. I would keep and hoard all of the gold for myself. Nope, this is issued through Regency Mint and Quality Silver Bullion. They're the ones putting the project forward. And again, I don't make anything off of them. I wanted to remove any funds that would come to me by issuing these coins so that you, the subscribers and viewers of this channel, would get absolutely as close to spot as possible. I didn't want to make anything off of you guys holding some gold. So that I hope you understand what that means. I'm not making a penny off of these. It's just you buying a gold coin from QSB. You're not buying it from me. I'm not getting a kickback or anything. This is our community that put this coin together essentially and is having it minted. I'm very proud and happy to have you guys with such enthusiastic support behind this coin, behind this silver piece. I mean, together we've, I think, in a way, made history. This is the first YouTube gold coin that I've ever seen or ever heard of. I think that the idea behind it, I think the inscriptions on it, what it represents, is very meaningful, very deep to not only myself, but others here in the community. And if you are one of the rare gold stackers in the YouTube metal stacking community, I would encourage you to consider one of these quarter ounce pieces. No pressure. Again, there's only 400, so it's first come, first served. I don't think we're going to have a problem of the 17,000 subs out there having 400 of these consumed rather quickly. I've seen messages from certain individuals that plan on buying anywhere from 2 to 4, upwards of 10. So that's a pretty incredible leap there. Anyone who's buying 10, that's going to be, well, pretty big position in gold there to make one in one purchase. I myself cannot do that, but I applaud those who make such a bold move. Thank you all for participating, being here, being part of the channel. Thank you for liking, for sharing, subscribing. Any support that you do offer the channel is always appreciated and motivating. It's the support from you guys out there in the community, down in the comments, the Patreons, the patrons, that really help me stay motivated in creating content, putting out live video feeds, and putting together news stories and broadcasts such as what we see here today and always. Again, thank you all for being here. Have a good day.